The wonderful world of Disney. Yes, indeed. Walt Disney stock analysis. Right here, right now on Barry Charles. From Snow White and the Seven Dwarfs when it started it all, to Mortimer Mouse, for the people that don't know, was the original name of what we now call Mickey Mouse. Yes, indeed. From Frozen to Coco to Moana to Lion King, The Aladdin, and everything in between. Disney Plus, ESPN, this is the future. Park segment, the movies, it all. Can Disney be a conglomerate smashed up top company again? You'll find out right here, right now at Barry Charles. Remember to subscribe and smash the like button. So, oh boy, Mickey Mouse loves you all. Let's get to it. Yes, indeed. How is everyone out there? Welcome, guys and gals, to the channel. Disney stock analysis. The company. Let's have a look at what's been happening with this company lately. You have to look at yes, obviously one thing that this has been a concern for Disney for a while here is 161.8 million subscribers. It's been a little bit of a downtrend in the Disney Plus. For the first time, it had been skyrocketing, and no, it just plateaued. Will there be another resurgence? What is happening with Disney Plus? Why is it not ravaging even more? Well, one thing, there's competition. You got a whole lot of competition out there. Apple, Amazon. I mean, it just keeps on going and going. HBO Max, it just continues to go on and on and on. But for me, they need to improve their adult content. Yes, they've got Hulu and they've got Star, they've got a few other things in different countries. But they really need to look for new content that goes to the adults. They've had a couple of good stuff in the Marvel realm that's helped them with Mandalorian and some other ones, but they really need to, Loki, but they need to continue to work on others. Yes, I'm just, what do we do? What do we do if you're a Disney fan? What can Disney do to improve? Well, obviously one thing, the big talking point at the moment here is that they're doing some job layoffs, which is obviously going to improve net income and improve profitability, which is something they've struggled with of late. But what I think they could do is financial education. Jeremy had said that maybe they should look at some acquisitions. And he suggested Fubo TV, which is not a bad idea going with thing, but I'm thinking even bigger. Do they want to really take over this place completely? Well, this is the big call for me. Do they go, boom, let's take over Warner Brothers and Discovery, Warner Brothers Discovery, and take all that media and be flying to the moon? Imagine having both Marvel and DC. They can do whatever they want. Batman, Superman, mix them all together and be some crazy stuff going on with Marvel if they manage to do that. Will this deal ever happen? Probably not, because even the government will come step in and go, hey, no, this is too much of a monopoly. When we're looking at Microsoft and Activision, there's another thing that is happening at the moment. But yeah, imagine getting all the Discovery Channel documentaries and everything. It would be insane how Disney would be, and maybe it would turn in pushing towards the $1 trillion company. It's a long way away from that at the moment. It's got a 2x from here, 3x from here. Yes. What can we do? What else can Disney do? Maybe they can look at electric vehicles. Now, people going, what? Are you kidding me? But like they could use this in their parks. Could bring out a Disney car. Imagine that, having Mickey Mouse rolling around, Donald Duck. I mean, people would buy the stuff. Like, I mean, it's not rocket science. You would have a lot of people that would actually buy the stuff. Maybe that's an opportunity where they can make some more money there if they want to go into the car company business. Also, one thing I think they could collaborate with is Meta platforms. Because yes, the metaverse is real, and I believe you can look at Disney as a company that could get into that space with the 3D world, and with everyone on their phones, like Disney doesn't, you don't actually have to come to Disney to get that experience of being on the park rides. Like they could do that all outside online, I mean, through virtual reality. So I think that's something that Disney could look at. And also, when I'm thinking about Disney Plus apps, like they can add that stuff into that and have a few more interactive viewings for kids as well as adults, just to get more engagement when they're not at the park. Should they bring back Mickey Mouse Club and have the singers going again and really improve that? That's a possibility. Yes, obviously this is gonna what's doing with the movie scene too. The movie scene has been a bit of a struggle for a while, and people aren't really flocking back to the movie theater. There are some are going there, but what can they do? Wow, that's a little bit about what's happening with Disney at the moment. Obviously, Bob Chapek is going to be there for a couple more years as CEO. Will he continue further than that? That is the question. But let's have a look at a bit of just what's happening in the Disney financials. At the moment, it's a $175 billion company. So, for instance, here trying to buy Warner Brothers Discovery, they'll have to shell out, well, probably more, or obviously more than the market cap, but say that's about $35 billion the market cap of Warner Brothers. They might have to shell out $50 billion, so that's about a third of this company. Ooh, a lot of money to put into but I think it would be worth it. Me personally, the PE ratio 52. That's a definite. That's high for Disney, but people can see some big growth in this company at the moment, so maybe it's a good buying opportunity. For a lot of people, why they haven't got back into Disney or have left, is the no dividend. It's been 4 years now, so nearly 4 years. Revenue in 2022 was 82 billion. That was up from 2021 by 15 billion. But then that looks all rosy. But why people are not buying the stock is because the net income has been absolutely rubbish. Yes, it was 10 billion in 2019. Then 2020 Rona happened and it went to minus 2.8 billion, which is understandable if all can't get the parks and movies. Well, what do you expect? Then 2021, 1.9 billion, so they got into a little bit of profit, and then 3.1 billion in 2022. But it's nowhere near the 10 billion and even 12 billion of the 2018. So there's a lot of work to be done from Disney to really get themselves back into profitability, and obviously using that cutting employees will help them improve, but they've still got a long way to go. Yeah, I think acquisitions is the way to go for this company to go forward. I think they could make a couple of smart plays in terms of just improving their business and trying to get more profitability. I think that's what they need to do. You're not just buying a business just to take over. You need to find a business that's going to give you more profit, and I think that's the way to do it. Shares outstanding has been a bit of a disappointment. They've been used to back in 2013 to 2018 and were buying back shares hard. But ever since 2019, it's pretty much stayed stagnant and gone up a little bit. Obviously, this is something they're going to have to start doing shortly if they really want to get people back. So the price at the moment is about $95 up and down with Disney. I think it's a possibility this company could go to 300 in, 5 to 10 years. They're not known as a big, rapid company, but because all the Disney Plus stuff has already come in, and I can't see Disney Plus skyrocketing again. It'll just slowly maybe improve or stay steady, unless other markets open, which is what they got to bank on. At some point, a lot of these companies that are already up high, can they get Africa going? This is where people say, but will they ever get there? That is the question. But to me, Disney is a potential buy. I'm not currently in the stock. I used to be in the stock, but I just decided that it wasn't going well. But it's in a range where I think you definitely make money. If you're buying now, you definitely make money going into the future. But I can see some better investments out there. But this is definitely a nice, safe investment. If you're looking for something just to put some money in and sit and forget it for 30 years, that's a good buy. It won't make you the richest, but you'll definitely have some money, extra money by the time you retire. Thank you very much. That's me, Barry Charles. Remember to like and subscribe to the channel, and we'll have more videos coming up. Take care.